Good afternoon, friends. This is Nicolaas on behalf of Mining Interactive. This video is recorded and inserted in my From the Desk of Nicolaas Looking Over the Horizon missive, which will be posted on the mininginteractive.com website and is also disseminated to my President's List. My comments in this video are based on my personal experiences since the early 1980s in the natural resource industry, and on Martin Armstrong's, or Marty, his economic confidence model, or ECM for short. I have followed Marty and his model since 1985. The next turnaround point on the ECM targets September 3 and 4 of next week. These turnaround points in the ECM do not always reflect the direction of individual markets, because at the time of these turning points, some markets are peaking while others are bottoming. And it is important to note that the ECM is a world model, and the turning points are on a global scale. Then the question is, will this turning point be a low or high in September, and why? In 1987, the turning point was the exact day of October the 19th, but it picked at that particular time the low of the October 1987 crash, and not the high. The US markets were not the focus of that specific turnaround point and that date, but only a reflection of the real change underlying everything, and that is global capital flows. The October 1987 crash also spread contagion among many international markets. So beware wherever you are when this turning point next week comes around. Remember, I'm not an investment advisor, and I am trying to do this video whereby I try and say to you, be aware of the turning point next week, and be very cautious no matter where you are in the world. Now back to these specific turning points in September. We are looking certainly at a very interesting week. Things will become much clearer after next week. Using my own crystal ball and looking over horizon, I try to unravel and figure out what the September 3 and 4 turnaround might be for you and me. It is my view that this September turnaround will probably, and that's the key word, probably, be the expected spike down in the US markets. If this correction occurs, then most analysts will start saying, we told you so, and it's over in the markets, so get out. And they will become perma-bears with a vengeance. However, please note that I emphasize only a spike down. A market correction will be healthy, but contrary to most analysts, I continue to believe, based on Marty's insights, when 2015 ends, the US markets will be much higher than we see today. And again, it's because of capital flows from Asia, from Japan, from Europe into the US dollar, which is still the reserve currency where you can park lots of money. Again, the economic confidence model is a world model, and its turning points are on a global scale. I am in Vancouver and look at and interpret things from a North American perspective, because that's the location I am in this world. It may very well be that the September turnaround instead has to do with the German markets or the Chinese markets, or perhaps a major geopolitical event. I am not, and I say this again, not an investment advisor, and I am trying to do this video to say to you, be aware of that turning point next week and be cautious no matter where you are in the world. Now back to the resource market, and whereas I have a lot of experience in the metals market since the early 1980s, today I see that opportunities are plentiful in that market. But patience is still the key, and you have to do your research. I expect these metal markets to start their euphoric cycle once again by the end of 2015 and going through 2016 and beyond. Now, I will herewith restate that the low in gold is not in yet. It still has to break 1,000, and preferably, as Marty says, 930, 950 before the bull market continues. Because we are still in a gold bull market. That hasn't stopped, that we're just muddling along the bottom, I can say. As I stated previously, matters will become much clearer after the September 3 and 4 turnaround. But for now, I anticipate that the correction in the gold market may not take place until 2015, around the January area. There are many hundreds of metal stocks out there, but the majority will never achieve any success. Consequently, you have to do your research while there is still time, and then quietly accumulate a position or add to your favorite share positions that you already have. Right now, even the majors are struggling, and their mines are cutting costs to the bone, actually, and many are being high graded as well, because it is more profitable for these majors in the short term. At some point, however, they will have to replace what they're producing with new and profitable, hopefully, deposits. But the problem is there aren't that many out there right now. The majors will have to start acquiring the few profitable deposits out there, and some of them are held by juniors, and there is a great opportunity as well. And there and really the juniors, the junior exploration companies come into this as well. It is those high risk juniors that will be bringing investors high returns going into 2016 and beyond. As a retail investor, you will be able to greatly benefit, when that euphoric cycle once again rears its head. So stay with it. And I stand by my previous stock alerts, but you must be patient and you must do your due diligence while you still can. As always, friends, stay tuned. And as I always say, bye for now.